What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we'll take a peek over here at the Bitcoin price chart and the altcoin market. Also talk about things going on in the macro world, along with some cryptocurrency news, in particular XRP news that we're looking forward to this week. Hopefully, we've got a little bit of a green day over here in the cryptocurrency market, kind of mixed. Bitcoin sitting there at $20,100. If you caught it yesterday, it was a pretty volatile day throughout all markets. At one point yesterday, Bitcoin was down about $935, but it ended up closing about flat, which was really the same story over here in the stock market, in particular for the Dow Jones, which was down 760 points at one point, then recovered the vast majority of it, closing down only 129. Now, as I'm recording right now, the markets haven't opened yet, but it looks like the Dow Jones is going to be down about 72 points, which puts you right about there. But the big story remains the breakout in the US dollar currency index, which really started to get some momentum behind it yesterday as the euro broke down from this trading range that it's been within since November of 2014. So nearly 8 years in this trading year for the euro. And yesterday it broke down through, giving the US dollar or the US dollar currency index a breakout of range as well. So this is a big deal for us in the cryptocurrency market, as the last 8 years, the DXY has been within this range. Now we're out of it. What are we seeing? We're seeing a breakdown over here in gold. This looks awfully familiar to the top of what Bitcoin looked like. We saw a breakdown in silver happen as well. We've been seeing the big move down in copper come in here. And remember, what we're looking at here on the screen, this is 12 years worth of data. Look how fast this is happening in here, just in a matter of just a couple of weeks. One of the bigger days for oil, moving down almost $10 in here, along with gasoline futures falling 32 cents. So off the very top here for gasoline futures, just in the last 3 weeks, fallen nearly $1 from a peak here at about $4.30, getting down to $3.30. So I'm sure we could all use some relief at the pump at some point. But we're seeing this in other commodities as well, including wheat, corn, a 29% fall since the top, just really open gap falling, and diesel. So the question comes of, is the inflation beast being tamed? But if the inflation beast is being tamed, are we going into recession? And if we're going into recession, what does it mean for the US stock market? So the Dow Jones has still continued to hold above the peak set there back in February of 2020, and still continues to hold above the 200-week moving averages. Those things are still in control right now, even with this crazy action that has happened here on the DXY with this breakout. Same goes for the Nasdaq, which yesterday, the only sector in the stock market that really was green was the tech sector, with things like Coinbase being up like 13% and ARK being up 9%, Meta, Facebook being up 5%, Google, Amazon, Netflix. It was really the tech sector that was up yesterday. And surprisingly, through that day with the breakout of the US dollar currency index, the cryptocurrency market stayed pretty tame in here. About a 1% move that happened in here from open to close. And even today, we can see net that the cryptocurrency market is still green, even with the DXY continuing to march up higher and the euro continuing to move down further. So wild time. Again, the times continue to be wild, because what was the discussion just a couple of weeks ago? Everyone was over here looking at the 10-year Treasury yield, which wicked above the high set back there in 2018, has moved down, has bearish divergences, and now is back down to 2.765 after peaking up there near 3.5. But it was sheer panic seeing these Treasury yields break out above the 2018 all-time high, and then now they're really starting to move back a little bit faster. So now this is kind of not the big worry right now, which I guess it could turn back up, but you do see divergences emerging over here, and you see crosses showing up in here. Now it's less about how high are they going to have to push interest rates to tame inflation. Inflation seems to be getting tamed just by looking at all these commodity prices. Whether this is just like a wave pullback and then another wave is going to come after that, we don't know right now, but boy, they're pulling back really hard, really fast. All these commodities, even natural gas is down 40% in the last 4 weeks. And like metals, like silver, this is a multi-year range that is being broken down from. Same goes for platinum. So it sure seems like the inflation narrative is tamed. And what do we know about inflation is we know that the whole time we were in here, it was the inflation narrative being pushed, but that wasn't good for the cryptocurrency market. So trying to assess whether commodity deflation or inflation is good or bad, because what does crypto tend to do? It tends to follow the stock market. It does not tend to do what the commodity market is doing, because we could see how commodity prices continued to rise and rise and rise, and that ended up being bad for Bitcoin, or at least that's what the narrative was. If our cost of living was getting too high, there wasn't enough room to invest in things like cryptocurrency or in Bitcoin. And that inflation did continue to march on, but Bitcoin did not respond as an inflation hedge to continued further inflation. So trying to find the correlation between commodity prices and what's happening with cryptocurrency, I haven't been able to find a more clear correlation really than just focusing over here on the US stock market. And we know that the stock market had a nice rip from the C19 sell-off and then moving its way all up. This is where all the pausing kind of began and the ranging really began in here for the US stock market. And right here, here's May of 2021. That's where the cryptocurrency market also stopped as well, ranging and then moving down. Now, the question is, will we take out the highs that were set over there in February of 2020? And will we take out the 200-week moving average? If you take both of those things out, I think it would probably point to really big problems for the US stock market and the US economy. And based on historical precedents set by the stock market and the correlation between crypto and the stock market would probably be pretty bad for the cryptocurrency market as well. And it does seem like, one of the big red alerts out there right now, at least, is this US dollar currency index breaking out and the euro breaking down here, losing its nearly 8-year range. So again, you have a really big mixed bag in here, right? You have the stock market that's still holding, you have the US dollar breaking out, you have the euro breaking down, and at the same time, you have commodity prices falling. Commodity prices rising were labeled as bad for crypto. Well, they're falling now. But look to the US dollar currency index, the 2 times that we had these big moves right in here, that was good for crypto. We're breaking out to the upside. But at the same time, you have indexes like the Nasdaq and the Dow Jones Industrial Average that have yet to hit 4.236 extensions, and both of them are still holding on top of their 200-week moving averages, like here for the Nasdaq and the Dow Jones. So the question comes, well, is the Fed going to come in here, right? And first of all, I've mentioned this many times, I'm not a Fed interpreting expert, right? But commodity prices are falling. We're seeing people lower their prices. They're asking prices on houses in the housing market. And they're seeing an uptick in repossessions in automobiles for people who really purchased these vehicles over the last couple of years, not really ever being able to afford these payments. And we're seeing that the auto industry is probably going to see a surge in supply hitting the market. So we're going to see automobile prices falling as well. So what do you have? You have all these commodities with the prices falling. You have the automobile industry that's going to be hit with a lot of supply. And we're seeing prices come down in the housing market. Is that going to be good enough for the Federal Reserve to change their tune, which everybody seems to have a strong focus on? And that's for everybody to kind of interpret on their own. But does that also mean that the stock market's going to bounce from here, or is it going to start plunging? Is the market going to bounce because the Fed's going to have to change its tune, or is the market going to crash because regardless of what the Fed does, the fact that the recession is coming, earnings are going to be down, supply is going to be huge, all these commodities are crashing. Does that mean the stock market crashes at the same time? That's a lot of data to take in to try to do fundamental analysis on to make your best guess on which way things are going to go. But when I look at it, the things I say, okay, well, I know that the Dow hasn't hit the 4.236 extension. I know the Nasdaq hasn't, and I know they're both on top of their 200-week moving averages. And historically, crypto follows the stock market. It doesn't do what the commodity market is doing. And just like the Dow Jones and just like the Nasdaq, the altcoin market cap of the entire cryptocurrency market is sitting there on top of the 200-week moving average, including the market cap. And we include the market cap of Bitcoin in there, sitting on top of the 200-week moving average as well, back testing the previous all-time high. So which one is it that matters? Is it that commodity prices are surging and inflation is terrible, so that's bad for crypto? Or is it that commodity prices are falling and the dollar is getting stronger and that's bad for crypto? That's for each person to decide for their own, but I want to present all the data to you. My argument has always been that the cryptocurrency market follows the stock market. And so I can see where the stock market is right now. My tune will change if we see the Dow Jones poke below the high set back there in February of 2020, and if we take out the 200-week moving average. Because the cold hard reality of how high we are at this point is unlike just saying we're in some type of recession. I mean, yeah, this move down was drastic in the great financial crisis. It's like a 54% move that happened there very quickly over there. But the difference between this time and this time is that if you look back to the 1920s, you look back to what happened before the Great Depression, we had a move very similar to this. The bubble that was set in the 1920s only went like 11% higher than this whole bubble is right here. And the fact that it's almost at a 4.236 extension to see a pop come from here would seem more like a Great Depression style pop than really like a recession style move to happen in this market. And I do believe that is coming. Whether or not that's going to happen from right here, or if there's another wave up that eventually pops the thing, it does seem like, and we can just look at this reality of life right now. I mean, are we living in a capitalist society at this point? Are we living in a manipulated type of economy where you have modern monetary theory where we're not even acting like an economy anymore? There's so much intervention that happens at this point. At what point does the intervention just completely lose all control of everything at some point? It seems like that day's coming. And that's an argument for a lot of the cryptocurrency people as well. It's an allurement for me as well, because you're kind of trying to check out from that game where there's no intervention of the monetary supply. But either way, yeah, we're getting on a tangent here at this point. But yeah, the question comes whether or not, are we going to a 4.236 extension, or has this thing already begun? Has the big move already begun? We know consumer sentiment is very low. We know that a lot of supply is about to hit. Will there be an intervention for a blow off top or not? That question still remains to be answered. So that's where we're at this week. We have the dollar breaking out. I find it kind of crazy. We haven't seen the stock market or cryptocurrency respond to that at all yet. You've got commodity prices falling. We even have oil today down at $98 per barrel. For a little history on oil for a quick second, for those who are interested in knowing, Russia and Ukraine having their own events going on with them is not new. We actually had something similar, or we had an event with Russia and Ukraine back in 2014, and we actually had the breakdown of oil happen from right here in 2014 at $92 to $94. This is where the actual breakdown ended up occurring in here. And then when the invasion of Russia into Ukraine took place, it took place right back here at the resistance level once again. So they started the invasion right here back at this price level, which was the breakdown level back in 2014. So we obviously had a big, massive breakout happen of that level, which was the resistance level from back in 2014. We came back and we back tested that exact same level, bounced up a little bit higher than a 786 Fibonacci retracement in here. And then now it's still ranging there. So it's still sitting on top of this breakdown level, which also happened to be the invasion level, which is right in here. So oil has still not broken down. I would think if you were going to see some type of breakdown actually happening in oil, you'd want to see this whole level get cracked through again to say, all right, it's back below that. But right now it's still just, at first it was like a back test. Now it's still bouncing around in here. It still hasn't officially taken out that level that was such a big level throughout history. It was the actual breakdown level. It was the actual invasion level. We're still above it, but we're at $98 per barrel right now. But again, as we start this week, we're seeing commodities fall. We see oil down 11%. We see wheat, corn, silver, soybeans, natural gas, gasoline, everything, all commodities moving down with the dollar rising. And the stock market still holding above its 200-week moving average here on the Nasdaq and the Dow Jones Industrial Average, with rates failing to have their breakouts. Meanwhile, the cryptocurrency market has still been able to hold its 200-week moving average in here. Take that off of log to see how dramatic that is of a move down to actually find itself catching itself right here. But you could see how complicated of an environment we're in. And none of this even mentions the news things that have been happening within the cryptocurrency market itself when you come to Luna, UST, Voyager, BlockFi, Celsius, all those other things. That's just their own things, right? This is trying to make sense of things from a chart perspective, but obviously crypto has its own things going on. But when we look at things from the smaller term time frame, like with Bitcoin here, you're looking at 20 days of being in this range right in here. Good opportunity to take a bigger step back picture look at the bigger perspective of the markets and to see how things are changing around us so much. Because if you go back to what 1 month ago was treasury yields rising drastically, inflation out of control. And here we are 1 month later and commodity prices are crashing. Treasury yields have fallen drastically. And now the dollar is breaking out. Meanwhile, Bitcoin, crypto, altcoin market, all still has just remained in this range that whole time, which is what the Dow Jones Industrial Average has done this whole time, the stock market. So a lot of looking around at a lot of different things, but for the last month, we've just been toe tap dancing right here, right with the stock market. So I see a lot of these things going on. I don't like seeing that dollar breaking out. That does make me pretty nervous. That's an 8-year range getting broken. But we can see that the stock market is still holding itself up okay, even with that happening in there. And my eyes and my focus are really over here. And looking over here on the right side of the screen, even with what's happening with the dollar, another big move today in the dollar. Somehow crypto is still holding up okay with it. So a lot going on, but we've done a lot of pointing to how pausing periods for the stock market led to bearish periods for the cryptocurrency market. And we can even see here, we were looking at it on the 1 hour chart for the last month, where we're just dancing with the stock market still right now, even on smaller time frames. So this seems to be the key. And hopefully they all hold their 200-week moving averages. But that's a bigger, broader look at the markets today, as the prices are still really kind of flat, right? 2%, 1%, 0%. That's not much to say. A lot is happening in the cryptocurrency market today. Yesterday was also pretty tame too, after kind of a rough start, but then kind of reclaimed itself. But this week, I know that there's news that a lot of people are looking forward to seeing. I don't think it really matters, what your favorite digital assets are. I think a lot of people collectively have kind of formulated an opinion that the SEC is anti-crypto, and is expected that this week that Judge Netburn will be ruling on the Hinman emails. And here's a post from Jeremy Hogan yesterday. I think Judge Netburn will rule on the Hinman emails this week, mainly because motions to strike expert witnesses are due next Tuesday. Speaking of which, looking forward to Ripple's motion to strike the expert report of Mr. Duty. It should be a doozy. I won't go into full details of what the Hinman emails are, but most people should know Hinman gave a speech in 2018 giving Bitcoin and Ethereum a free regulatory pass, stating that they are not securities. Ripple's been fighting to see those emails to see how they came to that conclusion, to see if Ripple or XRP were ever brought up in the discussions of this. It is expected to be ruled this week after a long, long fight on whether or not those emails should be released. Hopefully we get the answer this week. I think we're all probably tired of hearing about the different things of contagion happening in the cryptocurrency market, but today we got news that Voyager Digital has filed for bankruptcy after just 5 days ago posting that they had to make the difficult decision to temporarily suspend trading deposits and withdrawals. There we are, 5 days later, filed for bankruptcy. But on a positive note for other XRP stuff, if you don't know, Jeb McCaleb has had like billions of dollars in XRP, and his wallet is finally almost empty, which I don't really pay too much attention to on where he sells his XRP or how he does all of that. But lately I've kind of noticed something over here on Bitstamp, and I'm curious if it's him or what happens. But if you pay attention over here on the Bitstamp price chart, it kind of tells you when to not buy XRP. I'm not telling you when to, I'm not telling you when not to, but you can look down here and notice they're selling right here. They're selling right here. They're selling right here, selling right here, here. What is unique about all these time periods right here is they all happen at 10 a.m. UTC time every Friday. So there's someone who comes in here and sells at 10 a.m. UTC time every single Friday. Whether that's him, whether it isn't, I don't know. But I noticed that on Bitstamp. I noticed it last week. Kind of go through here and see what happens at 10 a.m. UTC. Price moves down. 10 a.m. UTC. Price moves down. 10 a.m. UTC. Price is moving down. 10 a.m. UTC. Price is moving down. 10 a.m. UTC. Price is moving down on every Friday. So I thought I'd just throw that out there. Whether that's him, whether it's not, he's almost out. We've all been waiting for it. And I don't use Binance. I don't promote using Binance, but Binance is the biggest exchange in the cryptocurrency market. And today they're introducing zero-fee Bitcoin spot trading. That's crazy. I don't use them. I'm not promoting them. I'm not affiliated with them, but they're the biggest exchange in the cryptocurrency market. Hey, look at that. 0 fees. Hopefully that forces the hand for their competitors in the market. Maybe some of the exchanges that I do use will have their hands forced to do the exact same thing, which is a win for everybody. Either way, lots of macro stuff going on out there. While the cryptocurrency market has been tamed, we do have Voyager Digital filing for bankruptcy. There goes another one. But hopefully that contagion can start to slow down. Crazy to see that dollar breaking out. Crazy to see those commodities falling and those rates pausing. The big question is, what's going to happen with the stock market? So we'll see how things go throughout the week. Hopefully we get the Hinman emails ruled on this week. I'm sure they will fight back. I'm sure there's another card up their sleeve. I hope not, man. I hope we can move past that. I've heard a lot of different times that, expecting this thing to wrap up. The dates are always changing, whether or not there could be a settlement in the summer or a settlement happening in September. But September is approaching quickly. We're only 2 months away from it. I think the ruling on this probably sets the tone on how fast things can go. So we'll look forward to seeing how that gets ruled this week. Otherwise, today's a tame day outside of the dollar really gaining some steam. Otherwise, I'll check in with you guys again this week. I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.